Nvidia just reported record revenue, but guess what? Their stock is down 3%. And it's all about China worries and sky-high expectations. They crushed the second quarter, yet the price didn't budge. Watch till the end to find out why great numbers didn't lift the stock.
Pivot over to Nvidia, which had very good earnings, I mean, across the board, but yet it fell. And it's interesting because there's a famous quote when you start trading in the market aggressively where it's like good news, bad action. And if you have good news, bad action, it means that everything good or anything positive has been priced in, and people are now selling the news where they're like, okay, this did what it expected, what I expected it to do. There could be some forward pressure, so I'm going to lessen my position. Or what also happens when you think about managing the portfolio, that this position has done so well, I now am overweight where I want to be, so I need to sell to get my position back into balance with how I want my portfolio to be constructed. And if you look at Nvidia and if you look at some of the different pieces, you've had this big run. You obviously have the Magnificent Seven, which is essentially the S&P 500 movements at this point in time. But when you start looking at this, Gary, on how you're viewing Nvidia, are we at a changing of the guard where people who have been there for the long haul are like, look, we're maxing out, and they're trying to lower their position? Or do you think that there is some potential next level moves based on the strength of Nvidia, the fact that they got the deal that they wanted with China? Or was this something where you're like, sell the news, capture your gains, and walk away to something new?
Yeah, so I think the reaction of people like on Twitter or X was fascinating for this one. First, let's just start with the basics. Nvidia had a spectacular quarter. The fundamental performance was over the top amazing. We're talking about just under $47 billion of revenue. That's up 56% year over year. GAAP net income of over $26 billion. Adjusted earnings per share of $1.05. That was above estimates. Revenue from the new Blackwell Data Center AI platform was up 17%. That doesn't sound like a lot, except it was 17% sequentially. It's over the prior quarter. The board approved $60 billion of stock buybacks. I mean, it really was incredible. And so, I kept seeing people on X saying, I don't get it. The performance was phenomenal. They beat estimates. Why is the stock down? And, the stock didn't crash. It was down like 2-3% in after hours trading. And it was down a little bit the next day. Nothing awful. But the answer is because all the good news was in the stock, and people act like there's no base, like there's no valuation that matters. Like, well, they beat, so the stock should go up. Well, the stock price was assuming that they would beat, right? The stock price every quarter, Nvidia, they give guidance, or people have they may be giving it under the table, quietly to the sell side, but they beat every quarter. And so people are expecting it. I think the primary reason the stock was down, Mark, and the place where you might see potential benefit in the future was the expected data center revenue and guidance included no H20 chip sales to China, right, for the next quarter. And so you've got this geopolitical uncertainty. And the thing that I think is really interesting about this is, the Biden administration said, hey, we're going to put limits on what you can sell to China. And so Nvidia, they got a little bit clever, and they found a way to deliver chips to China that were almost as good as the chips that got banned. They complied with the regulations, but they were in technical compliance, right? They were technically correct, which is the best kind of correct. Anyway, for all the Futurama fans out there. So, that didn't really work. And then, the Trump administration said, okay, well, we're going to ban this. And by the way, China found 17 ways around those restrictions. The restrictions did nothing. China was buying chips on the gray market. They were having chips transshipped. They were they were buying fractional time on, other people's chips. They found a million ways around this. And so, the Trump administration said, we're going to stop this. And then China said, okay, no rare earths. And then they had to trade. And so they said, okay, will you give us rare earths? We'll let you buy the H20 chips. And everybody said, okay, yeah, that seems like a good solution. And then China, after fighting to get access, said, no, those chips have spyware, which I find hilarious coming from China. But at any rate, so they said, okay, well, we don't want to buy these. Now, I suspect, and I don't know this for sure, I suspect the reason China doesn't want to buy the H20 chips is because they're buying the Blackwell chips, right? We saw a situation, God, what was it, a year ago, where some town in Vietnam bought more chips, more Nvidia AI accelerators than they had electrical infrastructure to run it, right?
Mhm.
That if everybody would have turned off all the lights, all their air conditioners, everything, and just simply tried to run these NVIDIA chips, they didn't have enough power now. That stuff's getting shipped to China, right? So that's where there actually is some potential upside, because right now the guidance includes nothing to China. What do you think is going to happen here?
So I'm cautious because so my business, at C6 Capital Holdings, we invest in power infrastructure, generation, and on the fertilizer side, energy infrastructure in total. But our main 90% of capital goes into power. And the biggest hindrance right now is power attributes and power availability. So when you look at PJM, which is Pennsylvania, Jersey, Maryland, which is essentially the key because it's called what's called an ISO, which is an independent system operator. And this is an entity that has no jurisdiction across, it goes across jurisdictions. It's looking at a swath, and within PJM is 13 states, different factions. And their power sales for 26, 27 went out at a maximum, which means that they set levels where they say, look, no matter what, you can't go over this price. And it's usually multiple standard deviations. So you'll be, surprised to know it usually doesn't get hit. And we've seen it over the last 2 years go from $120 a megawatt hour to $329 a megawatt hour, which is a massive move. And it's really coming down to power being the biggest hindrance. So to your point on the resale, because obviously Vietnam's buying them, putting a different flag, sending it over to China. In the US, we've purchased a significant amount of chips, but right now we don't have a place to put them. And that is going slower than expected. And now you have this new iteration of, well, what is the profitability of a data center? And if you remember back when the internet first started, or I should say really became commercialized, you had all these .coms popping up everywhere, but nobody figured out how to make money. Like, how do you turn a .com into a profitable business? And now you're having AI kind of go through this same change of like, okay, I have all this capacity. I have this AI training. I have this AI inference. And for those that don't know, an inference is when you actually query it. The training is when they take those queries and when they generate something and then learn themselves. So each one is going to consume a different type of chip. Each one is going to consume a different level of power. Inference being lower, AI training, which is usually continuous, is going to have the highest. But what do we do with it? Okay, we have it. I see it. But how am I going to parlay this into something like, are you going to use Google over something else because you have access to Gemini? Are you going to buy an Apple product versus a Google product because you like their AI better than others? For me, a summary of my email is pretty simple. It can be just as good on Apple Mail as it is on Gmail or Outlook. And then there's this unknown now of, what am I dumping money into? So I think when you start looking at the stock in general and these buybacks and the like, it's like, okay, well, what's the next iteration? Like where am I going to get the next level of value? Because is everybody going to take delivery of these chips? Can they deploy them in a meaningful way? What's going to be the growth in 2026, 2027, where I can already tell you power prices are 2 standard deviations above what they were last year? There's a lot of unknown, and I think that is why you're starting to see some of this hesitancy in terms of where that next price level goes when you start looking at stock prices across some of these magnificent seven, because you saw the same thing at AMD. You know, you're starting to see this exhaustion of, to your point, it's baked in. Okay, now what? Like, what am I excited about to get this to the next pricing level? Because I just don't see that growth over the next, let's call it, 2 to 3 quarters.
Yeah, one thing I think is really interesting, Mark. If we go back to the original dot-com boom, people said don't buy the dot-coms, buy the pick and shovel guys. So everyone was saying go buy Cisco or Nortel. That didn't work well. It worked until it didn't. And then, this time around, people are saying, well, again, buy the pick and shovel guys. So Nvidia, has done great, saying go buy AMD, also great. Supermicro, great until it wasn't. Dell, great until it wasn't. Some of these have done well, others haven't. But the way that we've played it at DKI is in that Pennsylvania, New Jersey, that interchange there, the PMI, we've owned Talon Energy, which owns the nuclear plant that's selling power to Amazon, at the meter, behind the meter. By the way, credit to Enrique Abeda for that idea. We did a webinar with him on that. But, we bought that stock at 115 and last year, and it's tripled since then, more than tripled actually. So that's gone well. And then long term, I own a huge amount of uranium because that's going to be the solution. You're not going to be powering AI data centers with solar or wind. Nobody is going to get permitting to build a new coal plant or natural gas plant in the United States. It is going to come down to nuclear. And so, we can debate who the winners are going to be there, but they're going to have to use uranium. So we own huge amounts of that. And that to me is the ultimate picks and shovel play, right? To really own the infrastructure, because without energy, nobody's getting anything done.
Yeah. And that's where, selfishly, that's what we created C6 to do in 2019, because we saw this new iteration. I can't take credit for seeing AI. I did not. But we believe data centers were going to be a big thing. We've talked about EVs. You've talked about, there's electrification mandates. So you have a chip or this hardware or this AI that is kind of coming in from the background and competing against these electrification mandates, which is where states are trying to get people away from natural gas, using electric heat, using electric stoves, electric everything, EVs, putting in superchargers, and you're competing. But remember, AI, even though power is a huge price to them, they're price agnostic, and they've proven that time and time again, because they're willing to pay well above market rates, as you talked about with Talon, as you talked about with nuclear, because remember, there's AI training and AI inference, and AI training needs 90% utilization factors, which just means how often does that power plant run? And to your point on uranium, you'll be shocked to know nuclear has the biggest uptime with the least amount of disruption, which is why they're trying to tap into these resources, and we're going to have to do it on a bigger scale. The next would be natural gas and coal. And then obviously, as you continue to go, then it's hydro. Then you have, solar and wind, which is far to the right. So you're seeing some of these issues coming up. But to your point, I like the pick and shovel where let's just say you did great in Nvidia. Maybe it's time to go to that second, third derivative. Look at where the copper is trading and copper miners. Look at where power producers are, because that could be the next iteration. Because okay, you've got the front end. Now we have to build out the infrastructure. Back to the steel comment. Where's the infrastructure going to come to? We're going to have to build some of these new wire lines. We're going to have to build new facilities, which all of it is built on steel. All the wires are going to have copper. So these are things to think about when you're looking at, I just crushed on Nvidia, now what? And that's where this can get very interesting.
Yeah. Great points. Thanks.